So I wanted to make a quick video looking at the price of Bitcoin here. We're looking at Yahoo Finance, and I don't really care about Bitcoin's price in particular because it was the first crypto, obviously, or at least the first widespread crypto. But from a technological standpoint, I don't think it's going to be the end game winner. So, but it is the first. It has to have all the name recognition, and that's where all the action is right now. And the entire crypto universe pretty much follows Bitcoin. So it's worth looking at the prices and what we think might happen. So this is we're looking at 5 years here, and obviously we had our big spike, and then it came down, and then this last little while, this support line that was in the 6,000 range broke. So now we are down to lower levels, and so the question always becomes, well, where does it stop? So right now we're at 3218, it looks like. And the next support level is down here, which is at 2,500. So, but that's, when people talk about support, what does that mean? That's the area at which, buyers are willing to buy in at a greater rate than sellers are willing to sell. So, for every seller there's a buyer, and for every buyer there's a seller when a transaction occurs. But it's that rate pressure that really moves prices. So, why do people do that? Well, there's a lot of psychological hooks that people have. The people who bought in before, have some sort of rationale saying that they bought at this price before, they're buying at that price again, so it's kind of the same thing. Sellers that sold way back here say, oh, well, this is the price I sold, now I have a chance to get back in. And that buying pressure is what creates the support. There's also this self-referential or reflexive behavior where this is well known now in technical analysis, has been for years. So people look for that, and kind of it's somewhat of a self-fulfilling prophecy, and you'll see that with like Fibonacci ratios and stuff, where the expectation creates the behavior. So 2,500 is a support level, but it's not a lot of support. When there's two parts to support. One is time spent at that, and volume. So here you can see the volume starts to pick up compared to these previous years because Bitcoin just became more popular. But it's actually clearer on a log chart. So if we change this to logarithm, so the logarithmic chart shows exponential growth. So if we look at here, we can say this is an exponential growth line that has been intact. And in fact, if you look at the earlier time series, you'll see that this line pretty well continues, and we've broken below that now. So we are below the long-term growth rate of Bitcoin, and there's a lot to be said for the price reflecting the network effect of how many people are involved in Bitcoin. So if we go back a little bit farther, we can see that this support range, from call it early 2014 all the way through to beginning of 2017. So 14, 15, 16, 3 years of support. It's at the time was a wide range. 1,000 to 200 basically. But in terms of the prices that we're at now, that's fairly narrow. So I think most likely what will happen is we'll hit 2,500, we'll see some bouncing around, and eventually that will break as well, and then we'll find this major support back in the sub 1,000 area. So 800, 700, somewhere in there. And I think that will form the base for the next move forward. Now the overall economy is, we're starting to see a lot more signs of markets rolling over. Real estate prices. Vancouver just had a really bad month, and that's been hot for years and years. New York prices are starting to come down. and transaction volume all around is going down. So that's one area in the stock market where we're seeing weakness, and everybody's looking and saying, well, is the Fed going to keep raising rates like they said they were going to, or are they not? And that's the big debate right now. So jobless claims are starting to tick up after going down for a long time. So lots of signs that the economy is heading into recession, and I don't think Bitcoin is going to benefit from that. So crypto is a fantastic hedge against fiat currency, especially in places where there's out of control inflation. So the U.S. inflation officially is 2-3%, unofficially higher, maybe 10%. But in other places, Venezuela, Argentina, lots of countries in Africa, places like Cyprus where they had the bail-ins and took people's money from the banks. Those are all fantastic places to, when there's an economic downturn, to rotate into crypto. But the major economies, U.S., China, Japan, EU, are not to that level yet. So in this next downturn, I don't think we're going to see a huge bid on crypto. Eventually, yes, down the road somewhere, because the mathematics of it kind of dictate that. But for this next one, I think people are more likely to sell crypto to buy just dollars or euros than they are to go the other way around. So I think we will see these 100 sub $1,000 prices, and everything else is going to go along with it. So and the great thing about that, if you can look at it this way, is that at that point everybody will pronounce crypto is dead, and that will form the capitulation to allow for the next leg upward. Now that might be in a year or 2 or 3, so just be prepared to be patient. I don't think we're going to see a V-shaped bottom. It's going to be one of these long, just like we had here, one of these long U-shaped bottoms, a long U-shaped bottom over here. So anyway, that's the way I'm seeing it. What does that mean for Steem? Well, Steem's at 23 cents or just below 23 cents right now. So if Bitcoin loses another 60%, let's say, then that would be let's do the math. 2.8 times 4, so that would put it at 10 cents, 9 or 10 cents. And then the next generation of whales will be born, because when you can buy in at 10 cents or 9 cents or whatever it is, then you can build a lot of steam quickly.